Okay, so warehousing transactions. Warehousing means that we're parking or warehousing the property. And when I got the safe harbors for reverse exchanges in 2000, the RevProc 2000-37, what they did is they took away our ability to do what we would call a true reverse exchange and turned all of our transactions in that reverse world into warehousing. So what that means is that the taxpayer cannot own the new and old property at the same time. They can only own one or the other. So if we do a reverse exchange and we do a warehouse replacement transaction, that means we're going to create an LLC, that EAT, Exchange Combination Title Holder, that's going to warehouse the replacement property until the relinquished property sells. If we warehouse a relinquished warehouse relinquished means we're going to take title to the relinquished property. A warehouse replacement transaction is nice in that it's the same structure as we use for improvement exchanges, all right? And I want to stress, so if you look at this page, it just talks about, warehouse relinquished, warehouse replacement. What about Bartell? Bartell, what is Bartell? So when we're looking at that, that was a court case that came down last year, and some of the exchange world, exchange accommodation, intermediary world says, yay, great, wonderful. Now we've got rules that say we can work outside the safe harbors of RevProc 2000-37, meaning that we don't have only 180 days to get the deal done. Our position was nothing has changed, okay? So I run the programs for a lot of the commercial community, and they were talking about this revolutionary Bartell ruling, and it was going to change everything. So nothing's changed. You got to understand what that ruling actually says, what it means. And all that happened in that transaction was exactly what we said was going to happen. The IRS came back in and said, hey, that was a horrible ruling, bad ruling, we're not going to follow this law, and you can't do that. So the companies that were all sudden pushing to make things work outside those safe harbors, nothing's changed. If we do transactions that work outside the 180-day timeline? Yes. If we're going to do that transaction, we know we have to cover some other issues like benefits and burdens of ownership. If we're looking at next page. If we look at a reverse and we work within the safe harbors, the government has sort of agreed to look the other way. And what I mean by that is, if I've got title, so let's say we do a reverse exchange and we warehouse the replacement property. The replacement maybe has some great cash flow. And let's say that we get in this transaction, we do the warehouse replacement. Do you think my client, or if you're my client, do you think you want the income off that property during the time we're warehousing it? Yes, of course you do. Can we give it to you? Yes, we can, per 2000-37, because we can offer you the benefits and burdens of ownership of that property during the time we have title if we work within the safe harbors. So, the upside of the property, you probably want it. Do you think I want the downside of the property? What happens if the thing goes dark and there's payments that need to be made? Do you think I want to do that? I'm getting paid $4,500 to $5,000 to do an exchange. You think I'm going to pay a $5,000 debt service payment for you? Probably not, okay? So you look at this transaction and say, okay, RevProc 2000-37 allows the accommodator to act in basically an agency relationship as long as you're working within the safe harbors, that 180-day time period being one of them. If you said, David, I've got a transaction, it's going to take me a year to get it done. We're doing an improvement exchange. It's going to take us 2 years to build it. Can we do that transaction? Yes, but we're now choosing to work outside RevProc 2000-37, which puts us at a higher standard. Now we have to worry about benefits and burdens of ownership. Now I have to put money in and have money at risk. Otherwise, I'm merely acting as an agent, which was okay inside the safe harbors, but now we're outside the safe harbors and the government's going to say, no, you can't do that. So, once again, when the government puts rules in place, it both ratifies and limits. It gives you a course, it gives you a path, but you have to play within the rules they give you. So, could you do a reverse exchange or an improvement exchange taking more than 180 days? Yes, and Bartell sort of says that, but you need to understand your risk. We have to do it correctly. If we're doing a non-safe harbor reverse exchange, non-safe harbor improvement exchange, so safe harbor reverses, we charge $4,500 plus 1/10 of 1% of the value of the asset we take title to, so 100 per 100,000. So $1 million deal, you're looking at a $5,500 transaction. If it's an improvement exchange, base setup of $5,500 plus the 1/10. If you come to me and say, hey, this is going to take us a year, 2 years, now we're outside those safe harbors, I'm going to have a base setup fee of $15,000 because I'm going to have to put money in there too. And I'm going to have to decide whether I want money tied up for the next year or two, whether I'm even going to do that transaction. But is it possible? Yes, it's possible. It just costs more, takes more planning, and we have to make sure we're covering those benefits and burdens of ownership issues, because we are now vulnerable from an agency perspective if we're choosing to work outside the safe harbors. Okay? An improvement exchange is the same, it's a warehouse transaction. An improvement exchange is a warehouse replacement exchange. So in addition to our costs, the other thing you have to be aware of is the costs of ownership. If there's a loan involved, will the bank allow us to take ownership of that property? So if you walk into one of the big banks, they probably don't have a box on the form to check. If it's a regional bank, you can go in and talk to somebody, they'll probably do the deal. But what they're doing, so when we're looking at warehousing a relinquished property or warehousing a replacement property, the choice between those two is based upon, one, your desire, which one you want to own, two, how much money you have to put down versus what you expect to net out of the relinquished property. If you have as much money or more to put down on the replacement property as what you expect to net, that means we can give you ownership of the new property. If you want improvements done, we want to warehouse the replacement property. So if you have less money to put down than what you expect to net from a future sale, that tells me we're going to do a warehouse replacement transaction, which once again requires a bank that's going to cooperate with us in that scenario. Other things that can happen, transfer taxes. We've got lots of deals in California right now. Alameda County, every time there's a transfer of property, they want to ding you. Okay, so how do we get those transfers done? Maybe we do assignments of membership interest. Washington State, you guys have transfer taxes. Depending on the side of the transaction, they will make accommodations for 1031 purposes. On one side versus the other, we can get credits for things, so you're not having to pay that transfer tax twice. It's once. So anytime we're doing warehouse transactions, we have to look at these. And you need to understand that potentially, in addition to the cost of the transaction, there's other things, banking-wise, that might come into it, or other counties, states, that may have some other issues that jack the prices up. So you really need to look at it. So my position on reverse exchanges is they're there, they're great if you need them, but use it as a fallback. Don't use it as a primary course of action. Ask for the time you feel you need. If we get to that point and we can't get the transaction closed as a delay, see if you can buy additional time. If you can't buy additional time, then the reverse is there.